As President Donald Trump's term officially starts, what will the markets be looking for in the next 4 years? Welcome to Trading Nation. I'm Eric Chemi, joined by Gina Sanchez of Chantico Global and Larry McDonald of ACG Analytics. Gina, let's start with you. So we've gotten through the transition of power, and now the real work begins. What are you looking for in terms of what investors are going to see, maybe in this first 100 days, the next 6 months, the year? What's your time frame for where you think things will actually make a difference?
Well, let's start with the first 100 days, because right now the markets have been vacillating. After having a pretty strong rally, they've started to move sideways and are questioning what's going to happen. And so at this point, we have to see Trump come in and start to execute on his plan. Now, whether or not that's a good plan or not, I'm setting that aside. The point is that anything short of perfect execution is likely going to be a disappointment to the markets. So part of that has to do with his cabinet picks. Part of that is going to have to do with whether or not he can get some big wins right off the top. For example, tax cuts, the repeal of Obamacare, which is otherwise known as the Affordable Care Act. We could see transitions in the energy industry if you see if you see kind of approvals of pipelines, et cetera. Now, again, I'm setting aside whether or not these things are good or bad. I'm simply saying in the first 100 days, that's what a lot of people are expecting. In the first 6 months, it will be a question of whether or not these have any kind of an impact. But let's be real, we won't know for a year. So I think the first part of this year is going to be entirely emotionally driven and determined on execution, whether or not that execution is done quickly. We think there's more room for downside here because the markets have priced in a lot of expectation.
Larry, I want to turn to you. You heard what Gina said, but look at the markets. Going back since we got above 19,900 in the Dow, everyone thought we were going to see Dow 20K. In this past 5 weeks, we've seen a 1.5% range between intraday high, intraday low. In my calculations, we've never seen a range that tight for that long. So it's the flattest month we've ever seen in our lives. What is going on here with the markets? It's not moving anywhere, despite the fact that everyone said Trump's going to bring volatility and the markets are going to move all these ways. We're seeing the least volatility ever. What's happening here, Larry?
Well, going forward, I mean, first let's look forward and then let's look back to this month. So first of all, there's a disconnect between Janet Yellen and the Fed and Trump. Last week we saw, well, this past week we saw something very interesting. Yellen was talking the dollar up and Trump was talking the dollar down. That's highly unusual. So the market's going to be looking for, if there's a continuation of that disconnect, that could set up a problem for the market. But most of all, I think the market's just been moving toward expectations of information on trade, on healthcare reform. And so far, we haven't had a disappointment. But the timeline, as Gina said, unless you get perfect execution, from what we're hearing from our team in Washington, there's real disagreement between Trump and the congressional leadership on the timing of Obamacare. There's disagreement on actually how to execute the tax plan. So the next 60 days, I think the market's going to be looking for kind of cracks in the foundation of this agenda.
So if you had to pick a direction, though, for the next 6 months, let's say, are you a buyer or are you a seller of risk assets?
Well, right now I'm a seller because I really think that the move in the dollar and the expectations are so high, but I want to buy fear, and I think you're going to get a good chance to buy fear in the first quarter. Similar to last year, we had a brilliant move higher in the dollar, which created some global stresses, and that buying opportunity in February was incredible. We were buying it for our clients at the bear trap support, and we see a similar first quarter this year.
Gina, what do you think about what Larry said? You want to buy fear going forward? You got a different strategy?
Well, here's what I think. I think Larry's right, that right now it's cheap to buy fear. But we're actually playing it slightly differently, which is to have 1 foot in and 1 foot out of the markets, because here's what we know about the risks. We think that they're very asymmetric. If everything goes okay, we might go up a little. But we think that if things go badly, they could go south very quickly. The problem is it's going to be very difficult to determine where we're going. So with volatility this low, we're actually suggesting that clients hedge their upside rather hedge their extreme downside by selling a little bit of the upside. So I think the volatility right now could really be used to collar positions so that clients can continue to participate in up moves, but really start to cap their down moves. That's really what I think the strategy is right now, because I do think the downside is asymmetric, and it's worth taking this cheap volatility and just hedging that out.
All right, well, that's interesting advice. I like it from both of you. Thanks, Larry. Thanks, Gina. Thanks for joining us here. Good conversation as always.
Thank you.
And thank you, everyone else, for watching us here on Trading Nation. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.